be talking today about ways to save you some money so that you can be spending it on other things. Are you in the market for a new car and you own a business? Wouldn't it be great to buy the car through the business? You could claim all the expenses, you can claim all the running costs, you could claim the interest on any loan, you can even claim the GST. And let's face it, it's being used in the business, so it really does belong to the business. What a way to save some money and get you the thing that you want. Buying a vehicle through your business can be really great because not only does it reduce the amount of tax that you pay by reducing your profit, but it's also a pretty decent perk to have as well. Not only this, is you can claim the full amount of the GST on the vehicle in the quarter that you buy it, and that gives you a pretty decent cash flow boost. Not only that, if you're buying the vehicle on finance, you might actually find it a lot easier to get the finance through the business rather than in your personal name. But before you go rushing out and buy this vehicle, I have one question for you. What are you going to be using the vehicle for? Now, if like the rest of us, you're going to be using the vehicle for catching up with your friends, doing the weekly shop, doing the school run, going on holiday, basically using it for whatever you want, whenever you need to be using it, then there may be a bit of a sting in the tail in terms of fringe benefits tax later. Now, your first question to me might be, what on earth is fringe benefits tax? Fringe benefits tax is a tax applying to certain non-cash items provided by your business to your employees. The most common item is a car. The ATO views the provision of a non-cash benefit as an addition to your salary, and therefore it needs to be taxed. I did a video around FBT and small businesses a little while ago, and I will leave a link to it in the description box below for you to be able to go and watch at your leisure. But basically, the grossed up value of the benefit being provided is then taxed at 47%. And that tax is paid by the employer. FBT can become very pricey very quickly and is a bit of a sleeper tax in the sense that it's overlooked by many businesses when they're actually going ahead and providing these perks to their employees. So what type of cars are we actually talking about here? Because there are a couple of notable exemptions to the FBT list. We are talking mainly passenger vehicles. So we are talking about Commodores, Camrys, Falcons, Prados, Land Cruisers, Tiguans, all of those sorts of vehicles. There are, however, some notable exemptions. So if you're really keen on buying a car through the business, stick to these ones and whatever the requirements are to keep them as exempt, and you should be fine. Zero or low emission vehicles such as battery vehicles, single cab utes, dual cab utes provided they can carry a load of 1 ton or more and can carry more than 8 passengers, a panel or goods van, hearses or other modified vehicles like limos, taxis, a 4-wheel drive that can carry a load of 1 ton or more and more than 8 passengers. Now, assuming you're not in the market to buy a vehicle off the exempt list, what can we do about buying this car? Being honest here, offering perks in a business like the provision of a car can be really great when you're employing or retaining top talent. However, in doing so, buying off the exempt list might not necessarily be practical. So let's go into this with our eyes open. For a $40,000 vehicle, you could be looking at an FBT bill of up to $8,000. So how can we bring this down a bit? Firstly, you can require the employee to contribute to the running costs of the vehicle. So that would be paying for things like fuel, servicing, insurances, maybe the loan repayments on the vehicle, all of those sorts of things. This could be a little bit unpopular with staff that you're bringing in, especially if you're trying to attract top talent, because the whole idea of this particular perk is that they don't actually have to pay for the running costs. They need to complete a logbook. There are 2 different ways to be able to calculate fringe benefits tax on a vehicle, and one of those ways requires us to actually have a logbook. Logbook needs to be kept for 12 weeks, so it's not the whole year, and for that 12-week period, every single kilometre needs to be recorded in the logbook. You can use an app to actually do this logbook process for you. There are plenty out there on the market, and it does make life a whole heap easier. The higher the percentage of the business kilometres on that vehicle for the 12-week period, the more we can reduce the FBT. So what other record keeping requirements do we need to have for the vehicle? We are going to need to know all the details for this vehicle. So that means its make, model, registration, when it was purchased, how much it was purchased for, including any GST, and how it was paid for. I will leave a downloadable schedule in the description box below to help you get all of this information together ready for FBT season. We will also need to know the opening and closing odometer on the vehicle, and again, I will leave another schedule in the description box below to help you get all of this information collated and ready to go for the FBT season. Whilst FBT is paid by the business as a whole, it is actually recorded on each individual employee's income statement. So we need to have the information on an employee by employee basis so that we can actually track how it's all measured and where it all needs to go. What record keeping do we need to have if we're buying off the exempt list? Well, like all things tax, just because the item is exempt doesn't mean to say you get out of doing any paperwork. Where an exempt vehicle like a dual cab ute is actually housed at home by an employee, then there will need to be a declaration stating that that vehicle has only been used for incidental private use. So by that I mean just like a trip to the tip every now and again, rather than the weekly shop. It's important to remember that for hybrid vehicles and electric vehicles, whilst they are exempt from FBT, the grossed up value given to the employee still needs to be reported on their income statement. So we still need to go through the data collection process and the calculation process to be able to record the grossed up value of the benefit being provided on their income statement. That's it for FBT on vehicles. I hope you found today's video useful. FBT can get quite complicated and can be costly if it's overlooked. Thank you so much for watching, and I will catch you in the next one.